Apple stock. So I just did Tesla, but Apple is one of the big ones that sort of leads the S&P and the Nasdaq to some extent. Yeah, so Apple's doing some very generic and sort of easy to trade looking stuff here. And please like, share, comment, subscribe, and I mean you can just see right here. Apple likes the support line, just came down to support. And so as far as a crash goes, I mean you really need Apple to break this level. And so this is, another key point. And I've been looking for charts where where companies are coming into support, and I didn't even look at Apple, which is ridiculous. But this is a really nice bull trend support chart that should be a decent entry. And what I'm calling for on most of the other charts is like a 3 to 6 month kind of run. And you could see here on Apple, if you just do some boring, you don't need to break up to higher levels. If you just bull this thing weekly, I mean, it can be really lame. You just bull this thing lame for 3 to 6 months, and you're at all-time highs. No big deal. Whatever. That's Apple, and it looks like a good entry to me. Not investment advice, as always, but yeah, that looks pretty good. Let's go back and look at Apple a little bit farther back. This is the 2008 crash. So Apple was not super hot. Surprisingly, was not crazy here. And you can see the dot-com bust destroyed it. 26 cents. So that's nutty. So yeah, so Apple was one of the, was one of the super risky like meme stocks back then in the 2000 crash. And then it was one of the blue chips in the 2008. It didn't take a very big pullback. And same thing now, even more so. Obviously, it's like the number one blue chip stock in the world. And it's pulled down to support, and now we're back at support. So this is a key indicator because the S&P is at a key spot where if we break down from here, we're going into bear market territory, and we got to start looking at bear charts. If we hold and rally, then we're still in the bull market. And so, Apple's not crazy volatile, but it's a good indicator. And I don't care about trading this, but I'd like to use it as an indicator. But this is key. This is key. Like this kind of a move is bear market territory. If we rally like underneath these levels, that's bearish looking, that kind of stuff. So, right. Key level on one more chart. And I guess I'll just pop in on the S&P real quick and see. Let me show you this sort of bear level thing. So, I mean, we have the bull channel since 2008 on the S&P, the green channel here. And so if we go breaking down under here somewhere, we could get a big rally up under here, but that would most likely be a bull trap rally and who knows what. Like, it could get pretty ugly. So if this level holds, normal stuff, you could do a weak bulling scenario on the S&P to lower highs. You could rally kind of hard. I don't know. We'll have to see one thing at a time, Let's see if this level holds. There's a bunch of charts that are at a key level here. Tesla's getting close to a key level. Apple's definitely at a key level. We have a few meme stocks at kind of key levels. The Nasdaq looks ugly. The IWM looks strong. So, yeah, I mean, I guess this is a good video to take a look at that stuff again. So, the Nasdaq versus the S&P. So this zone here is where the dot-com bubble topped out as far as the Nasdaq versus the S&P ratio. And you can see since 2008 or since 2000, the Nasdaq has been just increasingly getting strength against the S&P the whole time. And we just saw it top out above the dot-com levels, backtest, and fall in. So this is the trend that I expect to see towards the end of the everything bubble, or this, whatever you want to call it. Just this credit cycle, the end of this credit cycle, as you would expect to see tech and growth get weak, and then you expect to see materials, miners, minerals, commodities come in strong at the end, the last part of the credit cycle, and then everything goes down. Bonds go down, commodities go down, all the stocks go down, everything goes down. And I don't think we're there yet. I think the fact that we're just starting to get the NASDAQ peaking and coming down means that we're in this rotational phase where we're rotating out of the NASDAQ and into the miners and the minerals. It's something I tried to call last year right here, and it was wrong. Not yet, but I think it's happening now. And Apple is in the blue chip category, which should, I don't know, the blue chips tend to make it all the way to the end of the bubble. That's the more risky tech and growth stuff that rotates out earlier. And we've already seen that. Like last February, the super high risk stuff rotated out, and then like October, November, we started getting the next wave of tech and growth rotating out. And now the whole NASDAQ looks like it's trying to rotate out. But Apple, I think Apple and Tesla probably will make it to the end, but I don't think they're going to lead the charge to the last bull leg. If this rotational theory is correct and works out. And right, I guess I don't know, I've covered the money flow stuff a few times, but this euro-dollar chart is really interesting right now because everyone's talking about Fed tightening and rates and all of that stuff. But we have a 40-year trend of this yellow line, basically, of the interest rates on the euro-dollar futures. This is an international bond trading market. The euro-dollar futures, the interest rate top, just comes down. It keeps cycling and coming down, keeps cycling and coming down. This is a really quick crossover here, but I mean, if we just cycle and come back down, this is zero interest rates again. Nobody expects us to go back to zero interest rates like right now. It could definitely happen soon. Everyone thinks we're going to go to higher and higher and higher interest rates to fight inflation. And the bond market doesn't say we have that type of inflation right now. The bond market says the interest rate top is close to zero this time. Like we barely even pulled up away from zero. And we could go right back to zero. And you can see how much room is left on this chart. I mean, you can get to 2030 before we break out of this pattern. And that doesn't even mean that we're going to launch up to higher interest rates from there. You could even break down out of this pattern in any case. That whole interest rate, inflation, thing is, this is the true story. The true story is this international bond market trading just dictates where those interest rates go. And right now, they're at a high, at resistance, and it's not very high. Like, I think interest rates are topping right here, and then we're going back to zero. And that could happen in 1 year, that could happen in 3 years, whatever. But going back to zero means the same stuff we were doing after COVID and after .com and everything like that. So yeah, this could be interesting. Yeah, like this pullback that we're doing right now actually could lead to the Fed dropping interest rates back down. But the Fed isn't actually dropping interest rates, just bonds are just going to trade that way, and then the Fed will announce like, oh, we're dropping them. So that's what I'm looking at now. And actually, talking about that, if we go back to the S&P, yeah, because we have what looks like, well, here's the dollar. The dollar looks like, what a mess. The dollar looks like it's kind of topping. And not like a huge top where it's going to crash, but it looks like it's topping where it'll probably flag. We pulled up. That's pretty steep pull up. It'll probably flag over back to the bullish trend line, or we'll see where it goes, but that's a lot of padding. That's like maybe an entire year where the dollar's not ripping to the upside. That gives markets a chance to recover. I think people are going to get an interest rate surprise. I think that's going to be a shock. I don't think people will be that surprised if the dollar goes sideways for a little while. I don't think that's going to be too weird. If the dollar starts getting weak, that's probably good for gold, which it looks like gold's trying to bull. It looks like the dollar's trying to flag sideways. So I think we're getting a switch, and figuring out what is going to do well in a switch of conditions is always tricky, but that's my general idea, is miners, minerals, basically, materials. Yeah, anyway, I think Apple's a good one. Just to say, like, we're at a support area that's key. If we break down, we are looking at bear market stuff. But everyone that's saying bear market this or that is too early on that call. It's not there yet, but it will be there if we break down from here. So that's the outlook, not investment advice. Good luck on picking what is going to happen next, because it's always crazy. Or not always, but recently it's crazy.